Welcome, one, welcome all to this magical. I did use the word magical. I intend to make it magical, especially for all the good people out there on the social media network who happen to be tuning in. If this is your first time, let me officially welcome you to the XM family. Every day that the markets are open, we are here live doing webinars from start to finish, 12 different instructors, different strategies, different ideas from Forex to commodities to cryptocurrencies to stocks and everything else in between. So if you're really looking to really take your game to the next level, you really need a team to get behind and help you move in that right direction. Make sure you visit us here at XM. We'd love to have you. So welcome all of you viewers and my regulars who happen to be attending U.S. Market Open. And every time we have this session this time of the week, we talk about the U.S. market. Now, today is pre-holiday. 4th of July is tomorrow. It's Independence Day in the United States of America. So you get a half a day today. Probably not a lot going to go on here. So we'll start with what happened yesterday, continue to talk about some of the things we've been talking about. And for all you new people, where you get the edge here at XM. So if you remember for all the time, I'm always talking about the most bullish times in the history of the stock market. I'm talking about, just write this down so you never, ever forget it. The most bullish time in the U.S. stock market is always 4th of July weekend. It's almost never, you go back to the inception of the stock market, like the 1920s. I think you might have had 1-2 red weeks in 80 years. I'm not kidding you. Right, Danushka? Welcome. Hello, how are you? Not kidding. And guys, we talked about in the beginner room sessions yesterday about nuances, how these things help you, right? How these nuances help you make money, and that's one of them. So anyway, we had some Fed yesterday. I got the US 500 up here. Sorry for this yellow stuff. I have no idea. I clicked some stupid button. I don't know, but take a look at what happened there right before the Fed. Jerome said some things that were really good for the market, and up it went. And it just doesn't take much for this market right here to move. It just doesn't take that much. So again, keep that in mind. Really bullish time of the year, really active time of the year. I don't know what kind of business we're going to get done today, but it's pretty obvious. Yet again, now where you're sitting here, I'm going to go back to the daily chart, and then we'll break down a couple of these others. You're sitting right here at the verge of a breakout. Now, this is the high close in the market, all-time high close. You got up here and you made some prints a couple of weeks ago. You got a double top right there. You're going to see it. Let me get my pen tool out here real quick to highlight it. So it looks like, we might, even though it's a half a day, we might take a shot at trying to get up there and get into those all-time highs and break through. You got two high prints right there. Market's just kind of pressing on that. Now, another way to look at this, we talk about these sessions, just in case the new people here from social media. I find that volume profile there. I finally found that volume profile, Danushka. So, we have that to talk about today as well. So anyway, I would expect maybe today we get in. It's probably going to be light volume, so it might not be consistent, but it seems the theme of this whole year. So let's just talk about that. Jerome Powell, whatever he said, market loves it. And as I said, it's a bull market. So when you're in bull markets, here's what you have to understand where I really want to teach the lessons that I try to teach is you are always trying to look at these charts and let them do the talking for you, because most of the thoughts and feelings you have towards a market, they don't make sense. Markets don't make sense. They are irrational. You'll have bad news, stocks will rally. We saw that yesterday with Tesla. If the market's in the buying mode, they're just going to keep on buying. So for all of the people listening, here's how it works. When you're in a linear secular bull market, and what I mean by that phrase is this bull market started in like October, and it's been relentless since. You've seen NVIDIA go up several hundreds of percent, Facebook, Microsoft, AMD, Google. These things have been blowing up, triple-digit percentage runs off this AI theme. every dip has been consumed along the way. So whether we say they're overbought, they're too expensive, it's up too high, they just keep finding an excuse every day to buy. So when you're in a really strong bull market, all news is good news. They're just going to shake off whatever the bad news is and come up with a reason to buy. And this is exactly what we've been seeing in US markets. We've been talking about these rate cuts for 2.5 years now. Since like 2022, we've been talking about rate cuts. We still don't have a rate cut, but the market's still buying into the rate cut. So there you go. Welcome, Rimsha. I really don't use any indicators. I focus mostly on price action, and I think since there's some talk about that, my recommendation only. I understand I've been doing this for 25 years. If there's any new people out there, please. This is just my opinion, but I'm really kind of adamant about this. I'm not adamant about a lot of things, but don't use them. Please, until you've got a grasp of support and resistance, and you can understand price action, please don't bother with using any indicators. They're only going to mess you up. I've seen thousands of traders, 25 years. It's only something that helps an already great system. And we talked about that yesterday. We have these beginner room sessions for everyone that are listening where we talk about the basics. Everything revolves around support and resistance. Where is there a buyer? Where is there a seller? And how aggressive is that buyer? And how aggressive is that seller, right? So you can see right here, for an example, it's not me saying the market is bullish, really. It's the chart that's actually saying the market is bullish, right? So if you come back here, you had made an all-time high in that market, right? Now, one of the keys, we do a decoding chart session, by the way, every Wednesday. This is today. It'd be great if many of you came back and visited us here. We talk about how to read these charts properly from a basic format. But the thing here that you're looking at, so you know, is you pull back here, but take a look at it about right there, right? You'll see that really strong wick, looks like that, right? So what happens here is the market just kind of revisits a prior area of support, finds a strong buyer, and then the ultimate outcome is this. Now you can figure that out by the strength of that buying. So when you look at these tail wicks right here at the base, just look at those little wicks, right? That means somebody of an enormous size, an institution, a hedge fund, the general population are using that pullback to build positions. That's why you're not seeing it collapse. It could be at all-time high. The RSI could say it's overbought. The moving average could say it's overbought. You could have a MACD crossover, a stochastic. It's still going to go higher. Also, you'll see that you have, right, I know Danushka knows this, but we have some new people in here today. And by the way, make sure you visit our website, xm.com. But you'll see, what do you have? You know, you have a series of higher highs, higher lows. So if you're new to this game, when this pullback happens and pivots right here, this low is a higher low. That means this low is higher than the previous low, right? And the result of that is you make a new high. It's a higher high. That's what defines a bull trend. A bear trend is when you have lower lows and lower highs, right? So you come back up here, you pull back again, you base. This is, again, another higher low because it never comes back to this. It doesn't even come close to that area. And the result is yet again another breakout, right? So then you base again, another higher low, another higher high, right? It just keeps repeating that. Every dip gets bought and a new high is made. So think about that just for a second in terms of technical analysis, what that tells you. So here's what I'm saying about indicators so everybody gets on the same page. I don't care what that indicator tells you. You can use it, but I don't care what it tells you. If you're making higher highs and higher lows, that means one thing. The market is consuming every dip. Now, they may be euphoric. They may be out of their minds. They may be nuts, but that's exactly what they're going to do. And you're not going to stop that until that reverses, right? So here again is another higher low, right? Because this low the other day never even gets to that. And you're right back up to the all-time highs. So everyone who's regularly trading this is thinking my reward is I buy the dip, I get all-time highs. I buy the dip, I get the all-time highs. I buy the dip, I get the all-time highs. That's their reward. So that goes on for months, 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 and months, and months. They're not going to stop doing that until that stops. So when you're looking for a correction, you first have to get a higher low, like a lower high, a failed. Like if this move fails and then breaks that low, well, then you can start thinking maybe more bearish or maybe there's a correction. But until you've reached that point, you're just not going to get one, right? No problem, Rimsha. So remember that, guys. It's just make sure you've got support, resistance, and price action first. You can go along, and at some point, you'll already know where a 20 moving average might be, whether something's overbought or not. I prefer to just look at a clean chart so I don't get messed up because there's no guarantee that anything bounces off of a VWAP. They're just there to help you maybe take a 70% winning strategy and turn it into 73, 74. They give you a tiny bit of edge. And you have to experiment with those to make sure that you're reading them correctly and they fit with inside of the market. So let's see what we got here. Let's look at the 5-minute because I think we all right. So take a look at this right here. You're getting a little bit of selling right here. So so here's one good way to read a chart. So you're pulling back here, and the question is this a bearish move that needs to be shorted? And the quick answer is no. It's just a revisit. So I've explained this before. I know Danushka has heard this and the people that come to my sessions. There's new people here, so I don't want to confuse you too much. But the market works off of these imbalances. So when you have a bull run like this, for example, okay, all right, you have a bull run like this, there's many orders that get left behind. So what you're looking over here is this is the volume, but it's a volume profile where it's on price. It tells you volume on price versus volume down here, okay? So the way that's used is it's telling you where the largest orders are laying. So you're seeing right here, the largest orders are right at this price. So when this rallies up, the theory is if it's too fast, these orders are still sitting here. This market's going to come back and pick up those orders and then try to re-rally again. Now take a look at what you're seeing. This is a 5-minute chart real quick. Why are people buying into that red? You see it? Why are you buying into that red? Is because there's large transactions of volume. So if you're going to make a move from here, let's say down to here, you've got to dispatch of all of this business first. And that's going to be, long story short, it's going to be tough to get through that level real easily. So the theory behind all this as well, again, just glazing over this topic, you don't want to start selling or start shorting down into that pocket. You want to be up at top here when you make that trade. When it looks like this, you should be looking at buying either into some of these areas, right? And so on. And also, you'll see, we'll talk a little bit more about this today, but you'll see there's like patches where there isn't much volume at all, which will be hard to support. I know it's over a lot of people's head, but we'll talk about it again. Tesla. So again, we keep talking about this over and over again. Here is our daily chart. So here you go. So like before we've talked about this theory, and again, I encourage everybody after we cut off here at YouTube, remember, visit xm.com to come visit. This is important stuff about just learning when and where to get started in a trade. There's 3 things that I always talk about, right? Idea, execution, management. You got to have all that to be a great trader. Your idea is totally irrelevant if you butcher it up with bad execution, if you chase the price, if you get over leveraged too soon, and if you are losing money on it, you decide, I'm just going to try to hold it because I love this stock, you're going to get burned. You need all 3 of those to be working out well for you. We were talking about this. There's two two differences between retail traders and hedge funds, and that is they have time in the market. You're trying to time the market. So if we go back and look at this Tesla, you had built a base that had gone on for quite some time, right? And you rally here and it pulls back. This is that higher low.